Work hard, the most raw and obvious way to reach something. Maxime Lagacé. Work hard. We only ask 10 to 15 minutes a day, but it has to be every day the market is open. We say it over and over. You'll not understand the nuances about what is going on with each of the ETFs and or stocks that you follow. You've got to be in the market every day. It doesn't take much time, but you do have to glance at it, pay attention, chart it, and understand what's happening. Remember, weekly vertical crossovers are our number one indicator of a change in trend. A recross back in the same direction to the weekly vertical crossover on the 2-day chart is another possibility, and also the 4-hour chart gives us certain possibilities for jumping into trades. Now, let's jump into these charts. It's a weird day, folks. When I say that, I mean everything is up. Stocks are up, bonds are up, gold is up. Now, let's look at stocks first. We go to the S&P 500 on the weekly chart. Remember, we had our weekly vertical crossover way back on November the 1st. And since then, we've only had 2 weeks of pullbacks. So we see that the derivative oscillator, however, is negative. It's gone negative this week. That is interesting. Remember, the derivative oscillator is a triple smooth version of the MACD. It is very interesting to watch why and how that is occurring. If you haven't taken our training on the derivative oscillator, very helpful and insightful. I would encourage you to take that. Now, the training we have for you today is backtracking using stock charts to find trading patterns. If you're a subscriber, you'll see that in your show notes. If you're not, become one at chartingwealth.com for free. We see the price percent oscillator, all important, most important indicator heading up. Starting the week off with a big green up candle, again up 0.75%. Again, that derivative oscillator is up, price percent oscillator negative. Let's go to the 2-day chart. 2-day chart's losing downward momentum on the 2-day trend, the 2-day derivative oscillator. We see the price percent oscillator heading up, hasn't crossed over going up yet. First day of this latest 2-day candle is a red open box. Of course, those you understand Heiken Ashi candlesticks, of course, great training, our most popular training ever. 150,000 people have taken it, something like that. You can find it at our YouTube channel. You will see that we have a red open box. It means a slowdown in the up movement. So we see some slowing there. Again, even though it was an up day, just the first day, we'll see how this candle ends up at the close of the day on Tuesday. It is, of course, subject to change. We see down in the morning, recovery in the afternoon, price percent oscillator spiking up. So again, looking pretty interesting there. We don't have a trade on the S&P right now because, again, we have that downward weight on the 2-day chart, that crossover when it started going down. So again, have to wait for that to flip back over. That happened on the 28th of January. So we're just waiting, watching, keeping our powder dry, seeing how things shake out if we have a recross. Now, we leave the S&P 500, go to the Nasdaq 100, and it starts off again with a nice big up candle. High 231.98, the prior high 230.44, so it's reached a higher high already. Derivative oscillator, of course, is still green. It's losing momentum, but still green, unlike the S&P 500. And the price percent oscillator heading up quite nicely. We go to the 2-day chart, and of course, we had that 2-day crossover going down back on the 30th, and want to make sure that we note that 2-day crossover. Don't know what happened to it because we changed it around the other day. Perhaps I didn't save my chart. My bad. There we go. So we had, and we talked about on Friday, that crossover, wondering how many of you jumped into that at the close of business on Friday. Well, you did okay today, didn't you? It's what we talked about on Friday, the weekend effect. That is, the Friday effect. That is the fact that going into the weekend, typically, not all the time, but typically, the market continues in the same direction it ended the week. And particularly when we have a 2-day or a weekly vertical crossover, we expect to see that. Hope some of you practice traded that. Did quite well for you, didn't it? Up 1.21% for the day. And again, we see that the 2-day candle drawings reaching a higher high. Green up candle, wait for it to finish drawing at the close of the market on Tuesday. We saw again sort of a sideways slide in the morning, then popping up in the afternoon as far as the average pace goes on our Heikin Ashi candlesticks derivative oscillator. Still losing momentum, price percent oscillator heading up. That's where we are on stocks. You're going to leave stocks and go to bonds. Bonds up 0.28% for the day. Had a slowdown in the up movement on the prior week, ending the 7th of February. So far this week, have a green up candle, but again, look at the high in the prior week, 145.76. 145.25 is where we are so far. So we're not reaching a higher high yet. Price percent oscillator is still going up, but not super strong. Derivative oscillator is, though, gaining momentum. Go to the 2-day chart. What do we see there? Of course, the first day of this latest 2-day candle, nice big green up candle. Price percent oscillator heading up. Derivative oscillator still losing downward momentum. So we'll wait and see how this candle finishes drawing. Close of the market on Tuesday. The 4-hour chart hasn't crossed over going up yet. Now, what are we waiting for? Waiting to see if that's going to actually happen. It'll be interesting to see how the market pans out, how it actually pans out on Tuesday. Remember, we have the weekly in a confirmed up move. We have the 2-day in a confirmed up move. And of course, we're watching to see if indeed this 4-hour chart is going to cross over going up. Hasn't done so yet, so we'll wait, see what there is to see. That's what we're looking for. We talked about that at the close of this prior week. Now, let's go to gold. I love it. Gold up for the day, 0.26%. Starting the week off with a green up candle, but look at that. It's not going anywhere near as high as it did 2 weeks ago. We see the high so far, 148.45, in the prior week, 148.78, so it's not reached that high and not come anywhere near the 149.68 it did back on the week ending the 31st, the last day of January. So again, gold is still above the weekly trend line. Price percent oscillator is just flat. Derivative oscillator losing momentum. Of course, here's our problem in gold. Even though it's up, we had that crossover going down in gold. So we have that 2-day chart heading down. Derivative oscillator gaining downward momentum. Price percent oscillator pulling away from the red signal line. Maybe if gold gets enough strength, it'll pull back over, heading up, and we have a 2-day recross and can jump into gold again. We'll wait, see what there is to see there. 4-hour chart trying to cross over. It actually did cross over, not super strong, but I can see the blue over red at the end of the day, up in the morning, further up in the afternoon, again for the day up 0.26%. That was the least of all of our 4 charts that were up for the day. So again, keep our eye on things, see how they sort out. In particular, keep your eye on that 4-hour chart on TLT. Let's see how it sorts itself out, and we'll see how long the Q's trade runs. Hope you'll practice trading all of these charts when they offer themselves up to you. That is the way you're going to learn, and you're going to become a charting master. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.